What's going on, everybody? Capital Hungry here, coming at you with a new style of content delivery. As you may notice or may not notice, I got a better camera, I got the green lighting to match the Capital Hungry, and I got some better quality production footage here. That's not the point of this video. The point of this video is to discuss US jobs data at the end of the week. This Friday, September 1st, we have an important US non-farm payroll, unemployment rate, and wages report. Gee, why is this important? Well, this report is in particular focus because it can either add or take away from the soft landing narrative. You might be asking yourself, what's the soft landing narrative? The soft landing narrative is basically the assumption that the Federal Reserve can bring down inflation to their 2% macro goal without any major sacrifices in the economy or without triggering a deep recession. Crazy, right? I know. I think this is highly unlikely as we have yet to feel the heat of policy lag effects. Policy lag effects in this specific situation is the 2020 pandemic stimulus liquidity running dry and institutions, corporations, and businesses down the line feeling the tighter financial conditions and higher interest rate environment, which is going to take away from their profits, take away from their growth, and take away from their business activity. Now, with these inevitable policy lag effects, it's only the next step to see declining economic data. We've already started to see some contractions in US economic data with PMI figures. Now, we might see some further contractions and cooling in the labor market with this jobs reporting at the end of the week. Basically, these policy lag effects are going to be way more apparent going into 2024 as Feds are sticking to the sentiment of keeping rates up higher for longer. So, what does this mean for Friday? Well, if we see signs of cooling in the labor market and policy lag effects becoming much more apparent, aka unemployment rate going up, non-farm payroll going down, and wages remaining relatively stagnant, this can take away from the soft landing narrative and lead to some intraday bears on the dollar, intraday bulls on gold, and the stock market remaining relatively subdued. Overall, US dollar has been very bullish on Fed's policy positioning from a macro perspective. But if you haven't noticed, what I have seen over the last few weeks and couple of months is as we start to get signs of weakening US economic data, we get these data-induced pullbacks. This was apparent with the last CPI report, PMI reports, and the last non-farm payroll jobs report. And it may be apparent going into the end of this week. So I'm still macro bullish on the US dollar, strictly because of the Fed's policy positioning and what we've been explaining in the market analysis and trade ideas webinars over the course of the last months. But it's very common on an intraday perspective to get these data or event-induced pullbacks. So if that is the case, then we will have some short-term dollar weakness. My personal prediction is that we could start to see policy lag effects become more apparent and start to see signs of cooling in the US labor market, unemployment rate rising to 3.6 or 3.7%, and non-farm payroll remaining relatively subdued at the 150s or even lower, with wages remaining stagnant. This will lead to dollar bears, gold bulls intraday, and the stock market remaining softer. If I am wrong, that's perfectly fine, and we can remain objective and adapt to the other side, which is very easy to understand, optimistic data. If US jobs data is still optimistic, showing signs of resilience, with the trillions of liquidity through the pandemic still splashing in the system, then this is just very easy continued dollar bulls and very easy gold bears to close off the week, with the stock market buyers feeding into that soft landing narrative, the greedy crackheads with capital grabbing the dips after these corrections we've seen on the stock market so far. Just a quick little breakdown of the jobs report, soft landing narrative, policy lag effects, my expectations, impact on the main asset classes that we look at, and what to expect for Friday. I hope you guys enjoy this new method of delivering content, and I'll be doing this more frequently for different styles of videos, educational videos, analysis videos, research, news updates, predictions, and more. If you want more information, check out all of Capital Hungry free resources on the YouTube channel, Twitter, Telegram, and check out the private channel if you want to join a community where we're staying on top of what's going on in the markets day in and day out to keep an edge outside of what 90% of retail traders are doing. Thank you for your time. I hope you enjoy the video. Make sure you like, subscribe, drop a comment below. Tell me what you'd like to see more content on, and I'll see all of you next time.